Bitcoin right now is trading at 29,536. Crazy enough, beautiful move up. And what I'm impressed about here is that Bitcoin took out the fake news high from just a couple days ago or late last week, right? Or I think that was like even Monday or whatever it was. But the point is that is relative strength. When you can see that happen, that is very, very positive. Now, Ripple yesterday had another legal win. That's a huge thing for crypto overall. The SEC, honestly, just keeps on getting, honestly, they just keep losing. So you got to wonder what's going on there. But I think what's going on here, just to simplify it for you guys, is that the more losses the SEC racks up, and at this point they've racked up a lot, the more likely the ETF, spot ETF, is going to be approved. So what you're seeing is investors are starting to buy in on anticipation. They're finally at a point where they're basically saying this is a foregone conclusion, whether it's by year end or early 2024, there will be spot Bitcoin ETFs and prices already moving up because of that. All right, so again, that's the key. Now, as a technician, how do I trade this, or what do I look for? So the first things first, number one, when we were down over in this area, what did I say in these game plans? I said, I have a positive bias on Bitcoin. That was because this line here, with this line, with this line, with this line, and we broke out. So you have this downsloping trend line, we broke out. I said, as long as we stay above this area, you keep a neutral to positive bias on Bitcoin. If you go to verified investing crypto, I actually ended up buying Bitcoin now about $2,000 ago, give or take. Again, we're in that position on the long side based on this bullish kind of setup. So we got in right in this vicinity right down here once it broke and confirmed. Okay, so again, very nice price action there. The key is going to be this area up here, right up here. This area is going to be the big one. You have this upsloping trend line, which if I zoom out on my chart here, let me zoom out on this, right? So we know that this is now a very big line. So right here, right? So if we get up to this upsloping white trend line, right there is going to be huge, and you have this pivot top here as well. So right around 31 to 31.8 is going to be the level to watch on Bitcoin. Now, honestly, I probably will take some profits off the table in that range. Maybe I'll put it above. If we get an approval, I would expect a pop through that level at least initially. But then I'm very curious to see where price ends up. So the question again is, for me at least, in the position I have, I probably will have at least a half sell right up in this vicinity in case it goes there and doesn't break through. And then what I'll do, and this is the thoughts of a trader, thoughts of an investor, is that I'll probably hold a little bit in case it continues to go up. All right, now again, does this mean that Bitcoin won't again come back down to 20,000 or 25 or 15? No, it doesn't mean that. Once the hype of the spot ETF subsides, if the stock market is still tanking, then I do think eventually it draws Bitcoin down. So just be careful. Remember, it's all about swing trading. You want to kind of be on the cutting edge of the support and resistance levels. Buy support, sell resistance.
Renowned author Robert Kiyosaki of Rich Dad Poor Dad fame recently sent ripples to the crypto community. In a Twitter post, he boldly predicted Bitcoin's price would reach an impressive $135,000. This was a significant jump from his previous forecast of $120,000 made in July. At the time of his prediction, Bitcoin was hovering around $29,519, displaying a 3.43% increase in the past 24 hours. Kiyosaki's bullish sentiment sparked conversations in the crypto space, with some drawing comparisons to forecasts from institutions like Standard Chartered Bank, which predicted a year-end target of $50,000 for Bitcoin and a potential $120,000 by 2024. These predictions gained credibility from recent Bitcoin price surges, with the cryptocurrency briefly crossing the $30,000 mark for the first time since August 2023. Jerome Powell, the Federal Reserve Chair, made unexpected remarks with far-reaching effects not only on traditional financial markets but also the cryptocurrency world. Powell's hints of a potential pause in interest rate hikes tied to inflation trends have a considerable influence on the crypto ecosystem, particularly Bitcoin. Such statements can lead to significant shifts in investor behavior. When traditional markets appear stable, institutional investors often diversify into riskier assets like cryptocurrencies. A pause in interest rate hikes can stabilize these traditional markets and potentially drive funds into the crypto sector. The impact of these statements also extends to yield. Lower yields on traditional financial instruments can make Bitcoin, seen as a store of value, more attractive to investors. Furthermore, DeFi platforms within the crypto space offering high yields can benefit from a yield disparity between traditional instruments and DeFi. Powell's comments highlight the interconnectedness of traditional finance and cryptocurrencies. In a world marked by economic uncertainty, crypto remains a choice for diversification due to its non-correlation with traditional assets. The crypto market continues to evolve, offering both opportunities and challenges for investors and enthusiasts alike. Let's continue our enlightening discussion with Gareth Soloway.
I know that the markets are collapsing on the back of higher yields. The 10-year yield just this morning finally tagging that 5%. All right, now again, you probably can't see this, but if you look up here, the high of the day on the 10-year was 5.001%. Now, many people will say to you, oh, this is more like the boomer crowd. And no, I'm not saying anything against the boomer crowd. I'm just saying you could talk to people back then and they're like, oh, these aren't even high rates. But if you look at mortgage rates at 8% and you look at housing prices are so high that this is a different environment. In addition, guys, again, as we know, the consumer continues to be strapped, and we know that the U.S. debt is north of $33 trillion, approaching $34 trillion. So first things first, what is the market doing? Markets are down, but again, that is the culprit of yields knocking on that 5% level. Now you can see this is the daily chart of the yield. Now the first thing that I can see is that we are coming off of the highs of the morning. We briefly went above that pivot point, and again, that to me is telling me that we are coming back in. The 5% level is resistance. Even numbers have a funny way of doing this, where even numbers, again, they tend to be resistance. You usually pierce them, and then you have a check back. So right off the bat, as a technician, I'm saying, okay, 5% has now been hit. Now let's see, do we see yields come back down, or do we see us blow through 5%? If we blow through 5%, not only do I think there's a major crisis that will develop, maybe it already has, but also where are you headed? Let's flip over to the weekly chart. Weekly 10-year yield chart. If we zoom out, there's a clear trend line here. This would be your next stopping point. Now, again, if we look at this and we go all the way back to 1993, we have a pivot point right here. And look at that. That's a very clear level. It's at 5.27, 5.28%. So that would be another big move to the upside should we get through this 5%. But again, first and foremost, I'm watching 5% as a technician. Markets continue, and I know yesterday the markets didn't seem this way, but I will say this, markets are still looking resilient to me in the near term. And you might say, well, why? Well, that's a good question. Is it the jobs numbers? Is the economy holding up? But let me show you what I mean by that. If we look very clearly here, so let's look at the 10-year. Going back to the daily chart, we have a high on the 10-year right here. That was that topping tail right there. We made a higher high right here. Now, if we flip over to the SPY chart, which is the S&P 500, and if we look here, this would imply that the S&P should be making lower lows. And in fact, what we have here is we have a low over here and a higher low when yields are higher. So yields have gone like this, right? So yields were here and they've now gone up here. In theory, the market should be reversing that, being the opposite. The markets, again, if they were right here, they should be down here. That is not what we're seeing. We're seeing an upside move on the SPY. We're still higher. Now, that could change. My guess is if we bust through 5%, that will change and people will start to just dump stocks recklessly, and this is where that crisis could come in.
That wraps up today's crypto news highlights. Stay tuned for more updates, insights, and analysis from the world of cryptocurrencies. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.